What's going on, everybody? My name is Matt, and welcome back to Crypto Kings. It's such a pleasure to be back with you guys today, and we have a ton to talk about, so let's get right into it. So, if you guys have not already seen what Shiba Inu here is doing, essentially, it looks to be following the plan to a T, and it looks like we caught it right in the middle of a reversal. So, essentially, guys, if you have not been following what we are working with here, essentially, it looks like we are about to enter a brand new bullish movement. And I know so many people have been asking me about this, and what it really comes down to, man, is the fact that there are a lot of pre-existing trading patterns out there that historically have happened. And in a market like this, for crypto being a lot more volatile than maybe other assets, they still seem to work like clockwork sometimes. And again, the very specific instance of this happening is the inverted cup and handle. You guys can see it is upside down here. This is the cup, this is the handle, we head down, and now it is bearish. This is a very common pattern, but take a look at what it has created. This has led for the opportunity of another cup, another handle, and a time for a bullish movement because it is not inverted, obviously. So there are a lot of existing patterns out there, and what we really have to do is just to try to look for them and pick them out. Because when it comes down to it, guys, there are a lot of very key lines of support for Shiba Inu that I do not believe you're going to fall past anytime soon in the near future. Mainly, the key line of support that strikes me that I have been talking about for a while is, of course, the key line of support right around 45-ish. You guys can see it doesn't really dip below that here at any point, except for on the fourth here we head down to 43, but pretty dang close to 45 as kind of a line of support in general. But I'm also eyeing a different one, and that, of course, is what we can see a little bit higher here, right around 53, 54 ish. It looks as if this is a major mover for entering the 60s again, because right as we hit 53-ish, we head up into the 60s again. Then right here, we hit 53, we're able to pass it, we head up into the 60s again. Right here, we bounce off 53, head back up into the 60s again, it looks like. So there are a lot of opportunities here to sort of detect where these lines of support are occurring. And I got a comment one day, it was like, oh, how come the lines of support always move? Well, because they change on the day. It does change. I mean, unfortunately, as much as I wish, the lines of support always moved up, it doesn't always work like that. Sometimes we do have to reevaluate where we are working with. But again, I definitely do think the more historical data points there are for this, like you guys can see on the 4th here and on the 6th, of course, and the 5th here for the lower point, the more historical data points you have, I think the more reputable a claim about a specific line of support can be. When we are to check the Fibonacci retracement, of course, my go-to, indicator here that I love to always look at, you guys can see, you're going to work from the bottom to the top of the most recent run. So we have the very bottom here at around 43 and the very top right around 65. And you guys can see it essentially has managed to bounce off of the 38.2% line pretty dang well. It goes a tiny bit lower, but all around, I definitely think you can round up and say the 38.2% line here of the fib is definitely important because we slide down a little bit, making that kind of handle figure, and then now we are entering a brand new phase, what looks to be, again, a bullish movement. We definitely look as if we are succeeding in getting past the 23.6% line and establishing that as kind of a line of support to where I think we could see something like this in a very ideal scenario. Now, of course, is this going to follow a cup and handle pattern like clockwork where you have literally the cup, the handle, and then like an explosion? Is it going to follow this explosion like clockwork? Maybe not. It is very possible we could, kind of dip on this pattern and just consolidate. That is a possibility. I never throw that out, but I definitely do think all around we will be higher for the majority of the day today than we were yesterday and the day before, and that is a good thing. Speaking of good things, guys, make sure to check out Webull. Top of the link down below in the description. It is so easy to do if you guys want to get started trading stocks, crypto, all that good stuff. If you guys use my link, you guys will get some free stuff only if you guys use my link. So top of the link down below in the description, folks. I really do appreciate it. But all around, guys, again, what we're working with is an 18% increase here on the day, which is wonderful. Market cap right now is $33.5 billion, which is excellent, with the volume here going up nicely over the 24-hour period. Again, a lot of buy volume here, so that is always good. Circulating supply error is still in place, so don't know when that issue will be resolved at any point here in the near future. Again, when we take a look at our market caps all around, we have definitely surpassed Luna here, which is good. USDC for some reason here creeped up, probably because of Solana and people doing swaps and stuff. So USDC has creeped up even past Doge, but I definitely do think we'll be passing Doge and USDC at some point here again in the near future. Really neck and neck with Doge right now, as you guys can see. When we were to check some other indicators, of course, I'd love to check the moving average cross, one of my all-time favorites, and you guys can see we are entering what looks to be again where the red is on top of the green. Essentially showing at some point that this is going to be bullish when the red is on top of the green here. Unfortunately, the sort of issue is that it looks like right now they have recrossed with the green on top of the red. So that doesn't always mean a particular good thing, but this is just one indicator. You really can't go by this. One indicator could be right, one indicator could be wrong. Really, I think the best thing to do is go with the sum of what the majority of the indicators have said. So again, we have a little bit of a cross here. Don't think it's anything major, but that definitely is worth considering. Another one, of course, I like to look at is the MACD, which you guys can see here. Again, entering a soft kind of sell, same kind of thing here, but I would not, look at this as the be-all, end-all. Indicators have been wrong before. The relative strength index, another thing I love to check, of course, which is going to give me this error. So we're going to refresh and check the relative strength index, which you guys can see here on screen. And of course, I find the relative strength index to be doing us pretty good right now. So it's showing us that we have, definitely some headroom here, definitely some room to work our way up here if we want to. We could very easily head into, 62, 63, maybe 64 without having an awful lot of issues, which is always good. So we definitely do have some headroom here to work up. We also have some room to work down if need be without being considered, dramatically oversold. So, if things don't go according to, sort of the bullish route, but just kind of consolidate, I think most people will be happy with this as well. The point of the cup and handle really is just to show that there was a solid recovery from what people thought was the bottom. The idea is, of course, that the majority of people who have been trading Shiba Inu saw this in their prerogative as the bottom. And that's really what matters. As long as we are able to recover from being in the 40s and people are not, losing half of their money, but rather getting closer, creeping up slowly over time back to the all-time high. If that's what it takes, if slowly creeping up like that is what it takes, then I'm here for it. You know what I mean? That is A-okay. I'm not particularly against that. It's just a matter of, now people are finally not going to lose, a ridiculous amount of money here, being all the way down to 43. And I know there are a lot out there, who bought all the way at the top, who bought all the way at 88. And I imagine how difficult that could be to sit back and watch that. So definitely nice to see that kind of a recovery. And some people were asking me and wanted my opinion on this. It looks as if for some reason SHIB and Bitcoin kind of work inversely now. They never used to do this. They never used to work opposite like this. But for some reason, in my opinion, really, I think the best guess here is that SHIB was kind of grabbed by the meme coin community more than it used to be. SHIB, used to be more equated, you could say, with something like Uniswap or whatnot, because again, it's just, a swap. You have SHIBASWAP out there. So it used to be, I think, more equated with Uniswap. Nowadays, I think it has less of a correlation with something like this and more of a correlation with like Doge or some other meme coin out there. So again, I think that we are working in a pattern where the reason why this works inverse with Bitcoin as opposed to going, parallel with Bitcoin is because I think that the community for SHIB has gotten a lot larger and sees it more as like a meme coin, something that can have a run on a day that Bitcoin is not having a run. So that's my prerogative on that. Hope you guys have enjoyed. Make sure to drop a like, subscribe if you're new. I'll see you all on the next one. Peace.